Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 10th of April 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. A very similar looking board to the one we looked at yesterday morning. The pound sterling up by around 0.11% against the US dollar to trade at 130.74.50 shortly before we recorded the video. There are also gains for the Australian and New Zealand dollars against the US currency. The Aussie dollar adding 0.25% to the good, for example. The Mexican peso taking money off of the US dollar as well. The US dollar falling by 0.15%. And it was a very similar story for the dollar against the South African rand, where it fell by 0.10% overnight. Dollar index starts the session largely unchanged, perhaps waiting for some key economic data that's out later today. Okay, let's take a look at what's on the calendar, events that may move the markets. A pretty busy calendar today. We've already had Westpac consumer confidence for April out of Australia, and a far better read in the April data from March is very disappointing, minus 4.8%. We've had a speech from the RBA's Governor de Bell, in which he said that the bank would like to try and get a handle on the push and pull economic forces that currently affecting the Australian economy. To come at 6:15 GMT and 7:15 London time. We'll also be having a speech from the Bank of Japan's Governor Kuroda. And then at 08:30 GMT, manufacturing production, industrial production and gross domestic product data out of the UK for the month of February. And then we pause until 11:45 GMT. We cross over to Frankfurt for the ECB interest rate decision. Now, don't expect the ECB to do anything in terms of changing interest rates or altering monetary policy at the moment. However, what will be of interest is the press conference that follows 45 minutes later at 12:30, where Mario Draghi will set out his stall, as it were. UBS expected the ECB to perhaps even adopt a more dovish tone today. It'll be very interesting to see what Mr. Draghi has to say, for he's sure to be questioned about the continued weakness in the Eurozone economy and what the bank can do about that. At the same time as Mr. Draghi takes to his feet, we'll have some important data out of the US in the shape of consumer price index data for the month of March. Core and non-core measures here, both month on month and year on year. So a chance to look at how prices and demand are performing in the US economy there. At 15:50 GMT, we'll stay in the USA for a speech by Fed member Quarles. Then at 1600, we're back in Europe for the Council of Ministers, the European Council Summit on Brexit, which kicks off then. Will Theresa May be able to negotiate an extension to the Brexit process, and one that's acceptable to her and fellow MPs? That remains to be seen, of course. At 1800, we're back in the US for a look at the state of the government finances and the monthly budget statement for the month of March. But at the same time, we'll have the release of the all-important FOMC minutes, the record of how members of the Federal Reserve's Monetary Policy Committee voted, what they thought at the time, what they think about the economy and the path of US interest rates going forward. A chance for the market to rigorously overlook that. And then at the same time, we'll have another speech by a central banker, this time ECB's Benoit Curé. At 23:50, if you're still in the market, you can head over to Japan for the foreign investment in Japanese stocks data for the week of April the 5th. Okay then, breaking news and comment that's caught my eye overnight. First of all, Theresa May heads to Brussels today to ask for a further Brexit extension. The EU may grant her wish, and there have been hints of that by Donald Tusk and perhaps Emmanuel Macron, but not without conditions which she and her fellow MPs may not be able to accept. Meanwhile, US and Asian stocks have pulled back on global growth concerns once more, but interestingly, the market cap of stocks in Hong Kong has surpassed that of Japan for the first time since 2015. I'm not sure that metric tells us a great deal in isolation. Nonetheless, it's a trend that's probably worth keeping an eye on, and perhaps it could say something about where the growth may come from, if any, this year in Asia, rather perhaps Hong Kong rather than Japan, but we can't be absolutely certain about that from here. Meanwhile, Israeli Prime Minister Benjamin Netanyahu is said to be neck and neck with rival Benny Gantz after yesterday's general election in a result that's been called too close to call. And later today, top US bankers will appear before a congressional committee. A decade on from the global financial crisis and Great Recession that followed it, the bankers will make the case that they are in a much better shape, or at least their organisations are in much better shape than they were 10 years ago. Okay then, food for thought and something to take away with you into the trading day and beyond. Why not think about this? Technology plays an increasingly important part in our lives, but could the health of the global semiconductor market or sector have a direct bearing on global growth? Well, researchers at Oxford Economics think that it does, and they see the performance of chip stocks as a leading indicator for many high-tech economies in Asia and the wider world. And the chart to the right here plots the Philadelphia Semiconductor or SOX index against the JPM Global Manufacturing PMI in blue. And what the researchers from Oxford Economics are contending is that the recent pickup in the Philadelphia SOX index is a leading indicator for a bottoming out and an upward movement even in the global manufacturing PMI index, which we should expect to see over the coming months. So that's something to keep an eye on, and and just be aware of that relationship exists. Okay, it's risk warning time. Please do take the time to read this risk warning, because trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. And as I say, do take the time to read this risk warning thoroughly, please. Thank you for your time today.